Hello and welcome to another update video about Ethereum. Ethereum has spent yesterday just moving sideways within the range, just hovering below the 50% retracement level of our resistance area, which is highlighted in red. Okay, so the main resistance level that is relevant for immediate downside is the 50% retracement. I've highlighted it here as initial wave 4 resistance. Just take out the 23.6 fib level because we don't need it. Just want to keep the chart as clean as possible. But you can see that there is still downside pressure somewhat, apparent on the chart. I mean, obviously weekends are typically quiet, but the chart has not yet formed a clear 5-wave pattern to the upside and has not yet broken above resistance. Therefore, one more low is very likely. It doesn't have to happen, of course. The support area was and is well defined. The market dipped into it, as it often happens very quickly during those liquidation events, and then there's been a recovery. However, like magic, the market could not break above the 50% retracement. Now, you might say that's a random level. Not really. It is a key level for an impulse. So if we say to the downside, this move down was an impulse, a break of an impulse typically is indicated with a break of the 50% retracement. And yeah, the market knew that and sort of just kept us in limbo over the weekend, right? It's just indicating the uncertainty in the markets and just that the market doesn't really know what it wants to do. That's my view. And it hasn't managed to break above the 50% fib level. It's very much possible it's going to do that maybe today, tomorrow, but I can only tell you that we are likely going either into a larger corrective rally than a wave 4, or already an upside breakout if we move above $3,709, $3,710 So that's basically it's basically our signal, right? That's our signal resistance that things are certainly not going as per the yellow count. So one more low might just not happen, and it doesn't need to happen. It's just that, look, we've come down and we're just consolidating. I've seen it many times that they turn to the upside from these reactions. And that, yes, I'm telling you, another 4-5 pattern is likely, but only as long as we stay below resistance. That's very important from a mindset point of view. Because when we get these liquidations events, sometimes the 4-5 pattern is hidden in this liquidation candle and you don't see it. You can't count it. It's just hidden. And that's something very typical for crypto. It reached, and that's more important, it reached the target zone. Okay, you see that here. It's the target zone. So that was reached, and we've had a substantial reaction to it. So it's just that as long as we consolidate below resistance, we might get another low. But the low might be in. It's about having the levels which are more relevant than actually the count. That's why I always say trade the levels, don't trade the count. So main benefit here of the analysis is to understand when things are starting to turn to the upside again. Now our first signal will be a break above 3,710. As long as we stay below that, I'm not assuming that a low is in place. So I'm waiting for that signal, waiting for the market to tell me. There's never really a reason to impose our view on the market. I mean, the market is king. The market is going to tell us what it wants to do. We just need to be able to read it. Now, does it mean we are breaking out if we get above 3,710? No, we would have to first rule out possibly a larger B-wave rally as per the white microstructure here, which then could still find resistance at 3,739 or 3,783. A break above it would more clearly indicate that a low has indeed formed in all of this wave 4 correction, which started most likely here on the 23rd of May, which was a third wave top. So at the moment I'm counting the move down as a WXY structure in which we had an initial sell-off on the 23rd of May in wave W, an overshooting X wave. We're now coming down in the Y wave, which is an A, B, C structure, and the C wave would need 5 waves, so it might get one more low, but that's only reliable as long as we stay below the 50% retracement level that I shared with you. Overall, the price has plenty of space still in this main support area for the 4th wave, so there is at the moment no immediate risk of invalidation or anything, but there's also no confirmation yet that the overall correction is over. Bear in mind, the 4th wave can also be a triangle. If I see more evidence for that, I'm going to label it like that. It would be a running triangle with an overshooting wave here. But let's see first what what happens now next. So if, for example, it rallies and can't break out, it might turn into a triangle. That would simply delay the upside breakout. Yeah, that's my update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.